Hey everyone, welcome to IncomeBuddies. Today we are going to learn about the 5 signs of the next stock market crash. If you're new here and want more wealth building and investing tips, start now by subscribing and clicking the bell icon. Now let's get started. Number 1. Mergers and acquisition. Companies can either grow slowly by customer acquisition or fast by mergers between companies. With the access of cheap debt at a close to zero interest rate, companies often choose to expand their business by the means of mergers and acquisition of their competitors. This is a concern when big companies start buying up unrelated companies. Imagine McDonald's, who sell fries and burgers, start selling smartphones and cars. How weird is that? These companies often swallow up too much too soon. They use up a massive amount of cash from their cash reserve. A dangerous situation where it is a gamble of the future of the company. Time is required for a company to generate a revenue and gain cash flow. But by depleting their cash reserve, companies are vulnerable. These companies can fall and end up in bankruptcy from failed mergers and acquisition. Furthermore, the huge amount of debt together with the increase of interest rate may also cause the company to be in financial troubles. As the company is unable to meet its debt obligations due to the lack of cash flow, these companies are forced to close down. And the key takeaway, mergers and acquisition of unrelated companies are often a sign of greed and the increase of risk in the stock market. And Warren Buffett said it best: risks come from not knowing what you are doing. Number 2. Rapid rise. Is it safe to assume you will earn from the stock if the price of the stock market keep rising? Does it mean you should buy it right now and not lose out from its potential gain? Well, not exactly. Some traders buy using the rising trend. They use complex technical analysis to predict the future. Some succeed, but many don't. As a retail investor, more often than not, when the news of the stock finally reach you, the price of the stock is either overvalued or in a premium price. This is especially true when the stock market rises rapidly in just a few days. A rapid rise in the price of the stock or the financial asset can be a warning sign of a sharp downturn in the near future. We have seen numerous stock market bubbles, including the real estate bubbles and the tech bubbles, form after the rapid rise of the price of the stock. The problem with the bubble is that they give rise to panic selling, and thus ultimately leading to the market crash with a prolonged period of recession. Fear of losing out and the greed are the downfall of many retail investors. When there is too much greed in the stock market, it can be a sign that the next stock market crash is coming. The legendary investor Warren Buffett says, "We simply attempt to be fearful when others are greedy, and be greedy only when the others are fearful." Number 3. Margin debt. Do you agree that humans are greedy? When investors want to invest more money than what they have had in their bank, what do? Yep, they borrow. When investors want to make more money in a short time, they borrow to invest. More often than not, these are the short-term investors who sees a huge raise in the stock market and don't want to miss the boat. The lucky ones may succeed, while many don't. When you see many investors take on a high degree of margin debt, this is a huge red flag. It shows the marketplace is filled with greed. The high level of debt will signal danger and a possible sign of a market crash. It can be from the US stock market or the Chinese stock market. It doesn't matter. As the big boys the fund managers start selling, the market start to sink, and everyone panic trying to exit. This will crush the stock market even more. Number 4. IPO. IPO stands for Initial Public Offering, a type of public offerings in the stock exchange, where shares of companies are sold to different investors. An IPO helps the medium and big business to get their financial muscle to grow the company. With the help of millions of shareholders whom share the vision of the future of the company, an IPO will move the company into the next level of growth. IPO is all nice and rosy until every Tom, Dick and Harry start to apply and get approval for the IPO. One good example is during the dot-com bubble, where hundreds of tech companies are listed for IPO. Companies with no solid balance sheet or income statement are approved for IPO listing. In the year 2000, the bubble burst and the market crashed. The dot-com bubble have brought down millions of investors and closing hundreds of tech companies. A surge in the number of IPOs in any given market cycle may indicate a bubble, a clear warning sign that the stock market is going down. Number 5. Issue debt. When major multinational companies like the FANG, Facebook, Apple, Netflix, or Google start issuing debts for a stock buyback, this can be a potential trigger of a stock market crash. A stock buyback scheme is usually good for shareholders, but when the debt is required to issue to perform a buyback, things can get nasty. All debt are borrowed money, and they comes with a certain amount of interest. Debt have to be paid back to those it loaned from. A major share buyback scheme with the cash raised from the issue debt can be a dangerous game, a possible sign of a crash. It reduces the company's cash reserve and its ability to tackle any adversity that the company may meet in the future. If a company's cash flow is affected, it can affect its operation and eventually its revenue. It will bring the company into a very dangerous territory for not meeting its debt obligations. The collapse of one such company will be a trigger of a market crash. An example of such a collapse is the collapse of Lehman Brothers, and it triggers the financial crisis of 2008. That can be a double-edged sword that will wound you in the process. That is the match that lights the fire of every crisis. Every crisis has its own set of villains, but all require one similar ingredient to create a true crisis, and that is too much leverage. Before we go to the bonus content, be sure to like and subscribe because more great content like this is on the way. We are curious to know, are you surprised by any of these signs of the stock market crash? Come and let us know in the comments below. And here is your bonus. Is your neighbor next door, your barber, or even your cats are giving you expert advice on which stock to pick, so you won't miss out. Fear and greed are the cause of most stock market crash. These are the nature of human. Greed drives the market price to rise to an unsustainable level, and fear drives the market down to an unimaginable level. When everyone around you start talking about how to invest and what to invest, be wary, because this can be a sign that the market is overpriced and a sign that the next stock market crash is coming. If you have learned something valuable from here, please write fear and greed in the comments below. Let's help others to be aware of the sign of the market crash by sharing this video to them. Thanks for spending time with us. Make sure to like and subscribe so you never miss another video. See you on our next video. IncomeBuddy signing out.